Hello, you guys, and welcome to Charles Frank Real Estate. We are going to go over the practice exam, which you guys will need to be taking in order to get a real estate license. These are the 50 most common questions on the practice exam. So go through these with me. You'll pass your test, and you'll make billions of dollars in real estate. Make it millions. Make it hundreds of thousands to start out. But let's go over this practice exam together. All right, real estate license practice exam. First question. You are preparing a competitive market analysis on a vacant lot that you hope to list for sale. Which of the following approaches to value will be used in the development of the estimated value? A, cost approach. B, gross rent multiplier. C, income approach. Or D, sales comparison approach. The answer is D. It's a sales comparison approach for one reason and one reason only. It's because it is most applicable to the appraisal of vacant land. The cost approach is most applicable to special purpose properties such as church. Gross rent multiplier is for income approach of a single family home or maybe a 1 to 4 unit home. The income approach is used for an income producing property. All right. Next, which of the following comparables would be most helpful in appraising a home? Is it A, a similar home sold for non-payment of taxes, B, a similar property sold under duress, C, a similar home sold by a motivated seller to a motivated buyer, or D, a similar home sold by an unwilling seller to an unsure buyer? The answer is C. A similar home sold by a motivated seller to a motivated buyer. Now, the reason for this is this relates to the willing seller, willing buyer concept of value. The fair market value of a property is the price of a property would sell for between a willing seller and a willing buyer. Fair market value is the ideal price for a comparable property. Number 3, the period over which a property may be profitably utilized is called is it A, economic life, B, amortized life, C, income life, or D, net life? The answer is it's economic life. Reason for this, economic life is the estimated amount of time a property remains useful to the average owner. Just remember that vocabulary, pretty much. Number 4, wear and tear to the load-bearing members of a building would be classified as A, functional obsolescence, which is curable, physical deterioration, which is curable, functional obsolescence, which is incurable, or physical deterioration, which is incurable. The answer is D, physical deterioration, which is considered incurable. All right. Physical damage to the load-bearing members of a building would usually be considered too expensive to repair. If it is too expensive to repair, it is classified as incurable physical deterioration. You might as well just build a new one instead of spend all this money to repair it. Number 5. All right, we got this one, guys. While the economy is experiencing inflation, interest rates, A, drop and housing prices rise, B, rise and housing prices drop, C, rise and housing prices rise, or D, none of the above. The answer is C, rise and housing prices rise. During inflationary periods, interest rates and housing prices usually rise. Inflation measures the rate at which the average price of things like interest rates and house increases over a period of time. When inflation occurs. It causes a decrease in the purchasing power of money. So borrowers must spend more to borrow the same amount of money. Let's move on. Number 6. When using the market data approach to appraise a single-family home, recent sales are compared to the subject property as to A, capitalization rates, B, exterior features only, C, the entire property, or D, the rental income. Your answer is C, the entire property. The entire property is examined for comparison purposes. Income would be capitalization rates, rental income capitalization rates would be the income approach, rental income approach, etc., etc. Number 7. A real estate commission is usually based on the A, listing price, B, selling price, C, down payment, or D, loan amount. The answer is there it is. B, selling price. Real estate commissions are usually based on a percentage of the selling price. All right, moving on. 8. The increase of value with the passage of time describes A, appreciation, B, return on investment, C, return of investment, or D, depreciation. The answer is A, it's appreciation. Appreciation is a temporary or permanent increase in the worth or value of property due to economic causes. Appreciation is the opposite of depreciation. Number 9. Which of the following statements does not correctly describe a fiduciary? Is it A, a fiduciary owes loyalty to the principal, B, a fiduciary must conform to the principal's legal instructions, C, a fiduciary is an agent, or D, a fiduciary is a neutral third party? The answer, which is not correctly describing a fiduciary. The answer is D. The broker or property manager has a fiduciary duty to work in the best interests of their client, so a fiduciary is not generally neutral. They are not neutral. They represent. All right. 10. A broker secured a buyer for his client and the seller accepted. Under which type of listing could a broker not receive a commission? We've got A, net listing, B, open listing, C, exclusive listing, or D, exclusive authorization and right to sell listing. Now, this one's a little difficult. The answer, I thought the answer would be B, because an open listing means anyone can take it. But then I reread the question, and it says a broker secured the buyer. So the broker secured the buyer. So the broker gets the commission on open listings. However, the answer is A, net listings. Net listings are so interesting, actually. And apparently, from what I heard, they're illegal in a lot of states. So, a net listing is an employment contract in which the broker's commission equals all of the excess money above the minimum sales price set by the seller. If a broker secured an offer for the exact minimum sales price on a net listing, they might not receive a commission. So you make a deal with your client, and the client says, I want $225,000. Anything that you sell over $225,000 is your commission. So you get $235,000 sale, then you get $10,000. That's a risk you can take. But if you don't get above 225, then you don't get any because there's no money left over. All right. 11. Mr. Seller signs an open listing on his home with 5 different brokers. In this case, A, each broker has an opportunity to earn the entire commission. B, the brokers will split the commission 5 ways regardless of who sells it. C, the owner must pay a full commission to all 5 brokers when it sells. D, the owner must pay the first broker to take the listing no matter who sells it. Is it unfair to say this, but I feel like this one is rather simple. The other 3 kind of seem absurd. So the answer is yes, A. The broker does not have to pay full commission 5 ways. The broker doesn't have to split the commission 5 ways, and the broker doesn't give the commission to the first person who accepts the listing. All right. Number 12. A mortgage is usually accompanied by A, a deed, B, a conditional sales contract, C, a title policy, or D, a promissory note. The answer is D, a promissory note. I look at it this way. The mortgage is the description. The promissory note is the money. I promise to give you this money for this. And the mortgage is describing the house. So let's go over the answer. A promissory note, sometimes referred to as a note payable, is a legal instrument, more particularly a financial instrument and a debt instrument, in which one party promises in writing to pay a determinate sum of money to the other party, either at a fixed or determinable future time. So the note is the money. A check is a note. You know, on a dollar bill, it says C note on it. Dollars are considered notes. Promissory note is a financial instrument. Number 13. Failure to perform any of the terms or conditions of a contract is called A, novation, B, break, C, addendum, or D, breach. The answer is breach. Breach of contract is the violation of any of the terms or conditions of a contract without legal excuse. The non-breaching party can usually seek one of 3 alternative remedies upon a material breach of the contract: rescission of the contract, an action for money damages, or an action for specific performance. Money damages is pretty much suing for money, and specific performance is you have to do what the contract says. The judge is ordering you to do it, such as give me the house. All right, 14. A parcel of vacant land is listed for $100,000, requiring 20% down, with the seller to carry back the balance. The broker brings in a full price cash offer, but the owner refuses. The broker is entitled to A, half of the commission, B, the full commission, C, a commission as a percent of the down payment, or D, nothing. The answer, which I had some trouble with this one. The answer is D, nothing. So, since the offer does not meet the exact terms of the listing, the broker is not entitled to any commission. In this case, the seller could be looking forward to the interest that would be earned from seller financing 80% of the purchase price. Number 15. Under a lease, the leasehold interest lies in the A, the lessor, B, lessee, C, landlord, or D, beneficiary. The answer is B, lessee. A leasehold interest is the right to exclusive possession and use of real property for a fixed period of time held by the lessee. Remember, the lessor is the landlord and the lessee is the tenant. So, the lessee has rights and the lessee gets to enjoy the property as the law deems fit. Number 16. Which of the following requires real estate listings to be in writing? Is it A, real estate law, B, statute of frauds, C, CAR, D, none of the above? The answer, and the question's a little confusing. It should be which of the following laws or which of the following states that real estate listings need to be in writing. And the answer is B, statute of frauds. They say the statute of frauds generally requires all contracts for the sale of land or any interest therein, including listings, to be in writing. The statute of frauds is the statute that put that in place. 17. All of the following listings require that the broker be the procuring cause of the sale if he or she is to be entitled to a commission, except A, exclusive listing, B, open listing, C, exclusive right to sell listing, or D, none of the above. All the following listings require that the broker be the procuring cause of the sale if they get a commission. The answer is C. That's the one you want. Always get this one. Under an exclusive authorization and right to sell listing, the listing broker is entitled to a commission if the property sells through efforts of the broker or any other person. The broker is not required to produce a buyer or be the procuring cause to be entitled to a commission. Exclusive right to sell. Number 18. As it relates to the field of real estate, the legal term theft would include all of the following except A, entering into a home that is listed on the market and taking valuable items of personal property that belong to the owners. Remember, legal term theft except for these. B, defrauding clients by siphoning funds from a broker. C, defrauding lenders by signing as another person. D, defrauding investors by creating phony trust deeds and notes, selling them and using the proceeds for the broker. The answer is, and this was a tough one. This was a really tough one. But the answer is C. Now, I thought that the answer was C because if you're dealing with lenders, it doesn't really relate to the field of real estate like the other ones so much do. But it does. That's not the reason why the answer is C. The key word is legal term theft. Now, C is illegal, but it's not theft. C is forgery. So the word theft is a broad term that basically means the improper taking and carrying away of someone else's personal property, which applies to A, B, and D. Answer C is forgery, which would occur when someone signs a written document in another person's name. That's a good question. That's a tricky one. All right, 19. Mr. Owner enters into an exclusive listing with Broker X. 1 week later, Broker X brings in a full price offer, but Mr. Owner refuses the offer. Seeking an action of specific performance would be an option for A, the buyer, B, the broker, C, both the buyer and the broker, or D, neither the buyer nor the broker. Now, this is like a question we had earlier. And the answer is D, neither the buyer nor the broker. The reason for this is Specific performance is an action brought in a court of equity in special cases to compel a party to carry out the terms of a contract. A buyer has the option of suing for specific performance to compel the seller to follow through on a signed contract. But in this case, the offer was refused, so there was never a contract. Specific performance is not used to specifically enforce a contract to perform personal services, such as a broker's agreement to find a buyer. There was no contract signed, but everyone still has a right to be upset about the situation because it sucks. Number 20. Broker Jones takes an exclusive listing on a property owned by 3 different people. Broker Jones takes the listing contract to each of their places of business to get it signed. Broker Jones must A. Give a copy to the first owner who signs only. Give a copy to each owner when he or she signs. C. Give 1 copy to any of the 3 owners. Or D. Get them together in one place to sign at the same time. The answer is, if you just take your best educated guess, we always do when in doubt, choose the answer that will say to cross all your T's and dot all your I's, and that is B. Give a copy to each owner when he or she signs. Number 21. A tenant signs a lease requiring them to pay the property tax. The lease is most likely A. Standard lease. B. Sandwich lease. C. Net lease. Or D. Reverse lease. Now, a tenant, not an owner, a tenant signs a lease. The answer is C. Now, this was tough. They trick you here because you don't realize it, but we're talking about a commercial lease. Net leases are most commonly used in commercial leases. They often require the lessee to pay rent in addition to maintenance and operating expenses such as taxes, insurance, utilities, and repairs. The rent paid is said to be net to the lessor. Net lease. Which of the following can be recorded? By recorded. Not like a microphone, but like go to the county clerk and get it recorded so that it's in the public record. That's what they're referring to here. So which of the following can be recorded? Is it A, an exclusive authorization and right to sell listing? B, an exclusive agency listing? C, contracts of sale? Or D, all of the above? The answer is C, contracts of sale. That's it. Get the title recorded, get the deed recorded. Listings cannot be recorded. Recording is used for written instruments affecting the title to real property, such as deeds, mortgages, trust deeds, contracts for sale, options, and assignments. Once you buy a home, get it recorded in public records, whether it's the deed or the title or the contract to sale. Number 23. A broker brought in an offer, but the listing agreement did not include an authorization to accept a deposit. Which of the following is correct? A, the authorization is implied. B, the broker cannot accept the deposit. C, if the broker accepts the deposit, he or she would do so as the agent of the buyer. Or D, none of the above. A broker brought in an offer, but the listing agreement did not include an authorization to accept the deposit. The answer is C. If the broker does accept the deposit, he or she would do so as the agent of the buyer. If the scope of authority of a real estate broker is limited to just producing a buyer, the broker does not have the authority to collect a deposit on behalf of the seller. When an agent does collect a deposit in this case, the agent is acting as an agent for the buyer, which is the offerer for that transaction. Considerations may be. Considerations are mainly used for like a promissory note. It doesn't need to be money, but there has to be some type of considerations. So I think I've just given you the answer. Is it A, money, B, work, C, a promise, or D, all of the above? The answer is D, all of the above. A contract is not valid without consideration, whether it's money, work, or a promise. In contract law, consideration is what each party gets for completing the contract. In real estate, for example, a seller promises to convey their property to the buyer in exchange for money. The seller receives money as their consideration. The buyer receives a property as theirs. Consideration can be anything of value. Money, work, promise. In contract law, consideration is a detriment to the promisee and a benefit to the promisor. So unless it's a gift or a grant, consideration of any sort is a must. 25. A buyer enters into a verbal contract to purchase a house and immediately gives the broker an earnest money check for $500. Prior to performance under this contract, the verbal contract is considered legally A, enforceable, B, valid, C, void, or D, unenforceable. That is such a tough question because it's like, is it void? Is it unenforceable? Aren't those two kind of the same thing? Well, the answer is D. And the reason the answer is D is a verbal contract is an agreement that is not in writing and is not signed by the parties. It is a real contract but lacks the formal requirement of a memorandum, which is a written document, to render it enforceable in litigation, making it unenforceable. The statute of frauds requires all purchases of real property to be written in order to be enforceable. So until this property transaction is performed or entered into a written agreement, the verbal contract is considered unenforceable. It's still valid. You can have an oral contract all you want. But if we bring it to court, it's not going to do much help because the court doesn't deal with he said, she said. The court deals with written contracts. 26. Salesperson Beth took an offer to purchase from her buyer to broker Smith's office to present it. The offer included a $1,000 promissory note from the buyer as the earnest money deposit. Broker Smith should do which of the following upon receipt of the offer? A. Tell Beth she wasted her time and that he cannot accept the offer without cash or a check for the deposit. Tell Beth, or B. Tell Beth the note is not good enough because it did not come with the deed. C. Tell Beth she should have called him first as not to waste her time so he could call his sister to see if they would consider an offer with a promissory note. Tell Beth that a promissory note is just as good as cash or a check for the deposit and present the offer to his seller. The answer is D. Tell Beth that a promissory note is just as good as cash or a check for the deposit and present the offer to his seller. When acting as a listing agent, you must present or cause to be presented to the owner of the property any written offer to purchase received unless expressly instructed by the owner not to present such an offer or unless the offer is patently frivolous. The earnest money deposit is usually in the form of a personal check, money order, or cashier's check, but may take the form of a promissory note. It is actually, by law, you have to present all offers. You could tell your client, here's an offer, I suggest you don't take it, but at least tell them the offer. 27. Which of the following would not be a valid reason for the seller to terminate a listing? The broker's license was revoked. B. The seller declared bankruptcy. C. The broker was declared mentally incompetent prior to the listing. D. The broker was declared mentally incompetent after the signing of the listing. The answer is B. The seller declared bankruptcy. If the broker's license is revoked, he cannot contract with the general public. Therefore, the listing would be terminated. A contract becomes void when one of the parties is judicially declared incompetent. The fact that the seller declared bankruptcy could make the sale more difficult, but would not be grounds for terminating the listing. The answer is, which of the following would not be a valid reason for the seller to terminate a listing? Number 28. During the term of an exclusive authorization and right to sell listing, the broker has his license revoked by the Bureau of Real Estate. To prove that he is entitled to commission, he must prove all of the following except he was licensed at the time the commission was earned. B, the buyer and seller agreed to the sale during the listing term. C, the broker was the procuring cause of the sale. Or D, the listing was a legally binding agreement. Here we go. Which of the following must he prove all the following except? The answer is, believe it or not, I got this one wrong. C, the broker was the procuring cause of the sale. Here's another question that provides lots of irrelevant information. Under an exclusive authorization and right to sell listing, the broker is entitled to a commission regardless of who sells the property. Now, I understand why that is. I just didn't read the question carefully enough. Which of the following must he prove except? It doesn't matter if the broker was the procuring cause of the sale with an exclusive authorization and right to sell listing. We went over that earlier. You don't need to be the procuring cause of sale with that type of agreement. 29. You enter into a contract with a person not knowing he was judicially declared incompetent. The incompetence of the other party to this agreement would make the contract A, void, B, voidable, C, enforceable, or D, valid. Boom, the contract is void. Since one of the parties to the agreement was incompetent, the contract is void. 30. An exclusive listing agreement is A, a promise for a promise, B, a bilateral contract, C, an employment contract, or D, all of the above. The answer to this one is D, all of the above. A listing agreement is an employment contract between an owner of a property and a real estate broker, which authorizes the broker to find a buyer for the property. It is also a bilateral contract. The seller promises to pay the broker a commission when the property sells, and the broker promises to make a reasonable effort to obtain a purchaser. The subjective value of a property is the A, exchange value. Keyword here is subjective. B, market value. C, use value to the owner. Or D, lender's value. The answer is use value to the owner because it is subjective to that certain individual's interests and desires. So, since value sometimes depends on the use by a specific owner, it tends to be considered subjective. 32. The immediate surroundings of real estate are important because A, nice neighbors add value. B, property in an unattractive neighborhood won't sell. C, real estate is immobile. And D, none of the above. The answer, even though they all sound pretty good, like good answers, but according to this, the answer is C, real estate is immobile. And their reasoning is that real estate is immovable by nature and cannot escape its immediate surroundings. This is important because the surroundings will have a direct impact on the value of a property. That's a tough one to answer. Nice neighbors add value. Property in an unattractive neighborhood won't sell, which that's called regression. That's a property. But I guess the bottom line is real estate is immobile. 33. Two different properties are located side by side in the same neighborhood. They were both built by the same contractor at the same time for the same cost, are maintained the same, and contain the same square footage. If one property is worth less than the other, it would be due to... The answer is... The answers are A, functional obsolescence, B, economic obsolescence, C, deferred maintenance, or D, physical deterioration. The answer is A, functional obsolescence. And the reasoning is the only possible difference is that the properties do not look the same. All forces and factors that could influence value operate on both properties. Possibly the floor plans are different. The difference must be architectural and is considered functional obsolescence. So, I guess if you just look at all that's listed up there, like same time, same cost, maintain the same square footage, it must be the functionality of the places are different. Number 34. A flight pattern to a nearby airport was changed so that planes pass over a single-family residential neighborhood. Any loss in value to this property would be attributed to, is it A, economic obsolescence, B, functional obsolescence, C, physical obsolescence, or D, all the above? I appreciate this question so much because the answer is A. I was so confused. What's the difference between economic obsolescence and functional obsolescence? Well, the difference is outside influences like flight patterns that affect the value of a property are considered economic obsolescence. So I guess anything that has to do with the house is functional. Anything outside the boundaries of the house is economic. That includes flight planes. That includes dump sites. That includes a new construction that's going to last 5 years making noise. That includes all of it. I do wonder if it includes regression, economic obsolescence. Because those are the surrounding houses are making it. That's a good question. I'm going to look that up. Okay, 35. An agency relationship can be created by all the following except A, principals agreement, B, implication of the law, C, oral agreement, or D, voluntary agency. This is a tough one. I look at this and I see implication of the law. Because what the heck is that when it comes to agency? But the answer is voluntary agency. It's D. A real estate licensee cannot become your agent by volunteering. Both parties must agree to enter into an agency relationship. Agency relationships are usually created by written agreement, but can also be created by oral agreement or implied by the acts of the principal and the agent, which confuses me because isn't voluntary agency... There's a fine line between voluntary agency and implied agency. You say this is an implied agency relationship, and then the seller will be like, no, I'm pretty sure you just volunteered to be my agent. So that is a fine line right there. But voluntary agency is the answer. The measurement or the length of road that abuts a thoroughfare is referred to as A, front foot, B, frontage, C, width, D, the side of the parcel. The answer is B, frontage. The reason for this is frontage is a term used to describe or identify that part of a parcel of land or an improvement on the land which faces the street. So the measurement of the length of road that abuts a thoroughfare. I think the challenge is to know what the word thoroughfare means, which is in the question. All right, 37. An appraiser would most likely use a depth table when confronted with the valuation problem involving A, capitalization of net income, B, a sinking fund, C, commercial property, or D, residential property. Answer Commercial property. Depth tables are tables of percentage used to provide a uniform system of measuring the additional value of lots, which may be more valuable because of added depth. Depth tables are used on vacant land, usually for commercial property. Number 38. Which of the following represents the minimum time period for an exclusive right to sell listing on real property? Is it A, 30 days, B, 90 days, C, 6 months, or D, whatever time period is agreed to by seller and broker? Answer is D. A listing may be for any period of time that is agreed to by the seller and broker. Number 39. All of the following are essential to the creation of an agency relationship, except A, competent parties, B, agreement to pay consideration, C, agreement between principal and agent, or D, fiduciary relationship. The answer, B. The payment of consideration need not be involved in an agency relationship. One may gratuitously undertake to act as an agent and will be held to the standards of agency upon assumption of those duties. So there is no agreement to pay. There is agreement for commission. Number 40. An appraiser is appraising a property which is next door to an abandoned gas station. The appraiser should recommend A, soil engineering study, B, toxic waste study, C, seismic study, or D, all of the above. My gut reaction would be D, but the answer is B. My gut reaction would say B is the most likely, but why not get them all? No, the answer is B. You don't need soil engineering study, which I think wouldn't hurt. You don't need seismic study, because that's just for earthquakes and such. But toxic waste study. There's a possibility that the old underground fuel storage tanks used by the gas station were left in the ground and may be leaking. A toxic waste study would require a soil analysis to determine if the tanks have leaked. A soil engineering study is used to test the soil's ability to support a structure. Oh, soil engineering study is to see if soil can support a structure. So the answer is toxic waste study. 41. The income approach would not be used when appraising A, commercial retail property, B, residences in a subdivision, C, industrial buildings, or D, neighborhood shopping centers. The answer is B, residences in a subdivision. When there are no suitable comparables, or in this case, no income to capitalize, the income approach is not a viable method. Bonus question, what method would you use for residences when appraising? I forget. Would it be substitution? Would it be cost? Look into that. If you know the answer, tell me, because I'm drawing a blank right now. I know CMA is for real estate agents. Maybe it'd be cost. Cost to replace it. I think that's it. Yeah, I think it's cost to replace it. Okay, 42. Property that is very seldom sold would be appraised by which of the following appraisal techniques? A, market data approach. B, cost approach, what I was just talking about. C, capitalization approach. D, host cold or inwood method. Property that is very seldom sold. The answer is C, cost approach, which means that I'm wrong about residential. So, an example of property that is seldom sold would be government building or churches. There is usually no comparative information available on these types of properties, so the market data approach doesn't apply. The cost approach relates to construction information, which is readily available. So I guess, I don't know. Is residential just market data approach? No, I don't think so. I don't know. That's like a CMA. All right. 43. To arrive at a capitalization rate in the appraisal of an income-producing property, no provision should be made for A, manager's salary, B, return of the investment, C, federal income taxes, or D, all of the above. The answer is federal income taxes. To arrive at a capitalization rate, the appraiser makes an allowance for depreciation or a return of the investment. No provisions are made for federal income taxes that might become due on the income made by the property. 44. In order for demand to be effective, it must be implemented by A, amenities, B, location, C, highest and best use, or D, purchasing power. The answer is D, purchasing power. The element of value known as demand is rendered ineffective by lack of purchasing power. Yes. If you don't have any purchase power, then the consumer can't buy it. Demand is low. $45. An exclusive listing contains a provision for termination upon the owner giving the broker 24 hours notice. An exclusive listing contains a provision for termination upon the owner giving the broker 24 hours notice. A, this provision has no effect. B, this provision makes the contract void at its inception. C, this is proper as long as it states 24 hours or more. Or D, the broker may be subject to disciplinary action. The answer is D. The broker may be subject to disciplinary action. The reason for this is that failure to include a specific termination date, such as 12 noon on December 31st, is in an exclusive listing can result in suspension or revocation of the broker's license. $46. A residential property with great amenity value would best be appraised by using the... Wow, we are finally going to answer the question that I've been asking. All right. A, reproduction cost method. I called it substitution. It's, yes, reproduction cost. B, comparison method. I was confused because comparison method is done by real estate agents with CMAs. C, capitalization method. That has to do with income producing properties. Or D, replacement cost method. Again, I thought that replacement was cost. The answer is apparently B, comparison method. Comparison method would be used in this case by adjusting comparables to compensate for the amenities of the subject property. So I guess appraisals just do a much more hardcore CMA than real estate agents when they appraise the properties. Residential properties, that is. 47. When an appraiser uses the term adjusted sales prices when describing comparables, he or she is referring to A, sales price less concessions. B, sales price plus adjustments for inflation. C, sales price plus or minus adjustments for specific characteristics. Or D, all of the above. The answer, we know, is C. Sales price plus or minus adjustments for specific characteristics. An appraisal increases or decreases made to the sales price of a comparable property to arrive at an indicated value for the property being appraised. This is called the adjusted sales price. Number 48. Insurance companies are often not willing to deal directly with borrowers. In this case, they pay a loan servicing and preparation fee, and make real estate and mortgage loans available for purchase indirectly through A, Freddie Mac, B, mortgage companies, C, FHA or VA, or D, savings and loan associations. The answer is B, mortgage companies. Insurance companies usually make loans through mortgage companies. These loan correspondents negotiate and service their loans. 49. Which would be considered economic obsolescence? I asked this earlier if this counted, and it looks like it does. E. Well, I don't know why it says E, but whatever. E. Poor architectural design. F. Blighted neighborhood. G. Termite damage. Or H. Deferred maintenance. The answer is blighted neighborhood. I literally asked if that would count as economic obsolescence, and it does. Blighted neighborhood is also the theory of regression. Houses around you suck. It makes your property cheaper or less valuable. 50. Given the subject nature of market value, the listing price is most likely... Given the subject nature of market value, the listing price is most likely A, the lower end of the market value, B, the average market value, C, the higher end of market value, or D, not related to the market. The answer, and finally we come to the end, is C, the higher end of market value. The listing price set by the owner usually sets the upper limit of market value under normal market conditions. A prospective buyer's first offer usually sets the lower limit. Makes sense. So there it is, guys. The top 50 questions that you're going to need to know for your real estate exam. You're welcome. Thank you. We're going through this together. I love you guys. And don't forget to subscribe, because you will follow me on my journey as a real estate agent. And we're going to be helping each other out. We're going to make so much freaking money. Don't forget to subscribe. Charles Frank Real Estate. See you soon.